Hello, everybody. We are back with Tom Basso. I'm always happy to have Tom on here. He is one of my favorite traders, just has the right outlook on trading. I also love all of his books. If you guys have not checked out his books, please check out his books. You have to, especially all the stuff on risk management, position sizing, and most importantly, your mental health in trading and how to keep a good head on your shoulders. How are you doing today, Tom?
Doing great, Jason. Having a
Good.
good day.
Good. I'm so happy to hear that. So what's more important to you, price action or golfing today? Are you sitting there staring at the screen all day, driving yourself crazy, or are you thinking about golfing later?
Neither of those two, sadly. I did another interview about an hour ago, and I've been catching up back in the office on a Friday after being gone Tuesday through Thursday down in the valley. We're in the Phoenix area, Scottsdale area, going over our various contractors and trying to figure out what comes up next and making sure that everybody's on track. We're trying to get the electricity turned back on for the subcontractors and dealing with the local utilities. So there's been a lot of phone calling and emailing and taking care of the remodel project, which we hope is going to be done in January. And I can get my life back to normal and maybe do a couple of webinars and a few other things that I've been hankering to do for a while now that I don't have the telecommunications studio like I will have in the new house. So
Nice. Very cool. Yeah, so we talked last time about your book,
yep.
and you mentioned, different styles of all-weather trading. And I really like that. We just talked about that before off air just a little bit, because to
Mm-hmm.
me, I see that there's so many different. You got kind of the Ray Dalio type
Mm-hmm.
of Tony Robbins thing that they both kind of talk about in his book. You've got your style of trading, which is another strategy. You've got the quadrant model macro people. There's lots of ways to look at this. But I
Yes.
wanted to talk a little bit about your way. What's your way of looking at this? What
My
is an
way of
all-weather
looking,
portfolio?
my way is a little bit more, I learned a lot of it or was inspired by it. I kind of knew it back at Trendset days, but watching Lawrence Bensdorf, who wrote a book, Automating Your Stock Portfolio, I believe it's called, and reading that, it just was an aha moment. And I went right back to my Trendset years and said, that's really why we were so successful in stabilizing our equity curve. And you could take that to an extreme and do even better. So then that set me on a whole road of trying to what I call fill the potholes. It's you take your track record and it goes up the page, and every time you have one of these downslides and the nice smooth line going up the mountain, that's a pothole in the
Mhm.
road higher. And wouldn't it be nice to make those all go, flat and become a straight line up the page? So filling the potholes takes your artistic, the trader that is an artist essentially, and says, all right, what were the conditions during this time period when this pothole was created in my track record? What caused the pothole? Dig down into your strategy, figure out which markets, which indicators, why was the drawdown created? Understand the math behind it. And then, without necessarily tweaking what you already have, think about that period from the standpoint of, if I knew that a period was coming up that was something like this, and I would expect what I'm doing now to have a similar drawdown because it's not going to handle it very well, what kind of strategy could I employ side by side with what I'm currently doing that would soften the blow, would try to make money during that period? It would be mathematically designed to go after profits during that period. Once you have that logic and math, then I like to then blend it all together and see, well, all right, how did it perform during other periods? And frequently you'll find, that maybe the whole strategy maybe has a very low return, or it might not have a great return to risk, or all sorts of different things. And most traders would abandon it then and say, oh, that's a crappy strategy. It doesn't produce, like 30% with a 10% drawdown. I'm not going to worry about it. I instead take it and I said, does it make money during that pothole? Yes, it does. Okay. blend it together with everything else I'm doing, and see how it hurts the rest of the periods. And frequently you'll find situations where, like a good example would be selling option credit spreads. You would have making money during sideways periods because the credit spreads would tend to expire worthless, and you just coin money every time you do one of those things. Where would you lose? You'd lose during very, very trending markets. The call spreads, the put spreads would all be losing the maximum amount. It would be limited, but it would be losing trades. But what would be happening with the rest of your portfolio? If you're a trend follower and some of your other strategies are picking up on that, you're coining money off the rest of your strategy. So you make a little less, but you got that thing in place to try to help you with the drawdowns during those sideways periods. So what I like to think of it as I'm more in a daily time frame. Once a day, I like to run my stuff and see what's going on. I really don't want to run it more frequently than that. I think weekly for me would be too much. I'm too want to be in control and kind of on top of it. So I think daily is fine for me. I'm now running 9 strategies. They're easy to run. It takes me all totaled. We're shooting for 15 minutes if we can get this last piece of software up, but right now it probably takes me about 40, 45 minutes tops. And I'm finished and I'm good for 24 hours, and I can do interviews and I can, work on emails and, write a book or whatever I want to do. And so I think that that's my attitude towards what all weather means to me, but it's custom design for my financial puzzle that I'm trying to solve. A good example of another approach would be a friend of mine, Eric Crittenden, who, by the way, I'm the Standpoint Management Company's chairman of the board, and I don't do anything with the day-to-day. Eric Crittenden is the chief investment officer, but he's also an all-weather trader. And the way he approaches it, he says, okay, let's see, we got to manage billions of dollars. Tom doesn't have to, believe me, my portfolio is not billions of dollars. I'm comfortable, but not that comfortable. And so if he's designing something for $1 billion, what I do would not work at all. Because, you start getting into $1 billion, you're starting to move large amounts of contracts and you're going to start pushing the market around. So you want to do
Good
less
point.
trades. So Eric takes the capitalization of in the trading volumes and liquidity of the top 75 global macro markets, futures, currencies, precious metals, energy, grains, meats, everything that's out there. And he, once a quarter, ranks that from top to bottom. He eliminates duplicate types of markets. Like if you've got multiple debt instruments all within one country, he'll pare it down to a couple. Once he gets that list done, he's probably in the top 80 liquid markets around the world. He can trade those long or short. The other 50% of the money, roughly rebalanced each year, would be in global equities by way of ETFs, which is very efficient and tax efficient on top of that. So he buys and holds that, gives him the upside of the stock market every time. Like the last week, we've had good stock market. He is getting a big boost off of that. But at the same time, in a down stock market, which we just had, over the last, month or two, he's got all these, he's got precious metals, he's got energy going nuts, he's got currencies making big moves, he's got short bond market. So he can pick up profits to offset it, and that gives him that all-weather feel. And because he's in the most liquid futures markets and he's in the ETFs that have huge capacities, he can move billions of dollars if he ever gets to it. We're running about 660 million now, and they've been in business less than 4 years. It's amazing to me to watch them grow. They're doing a great job. The fund's ticker is BLNDX, Blendex.
Blendex, yeah.
I think it's the Standpoint Multi-Asset Fund is the official name, if I remember right. I should know it because I'm the chairman, but I know the ticker. The official name escapes me sometimes, but it's he can go long or short 75 different markets. You can imagine the ability to try to make money, and no matter what is happening out there, crude, he was short crude oil during the COVID crash, and he took it into negative territory. He stayed with it and rode it all the way down to negative 20 or something. Amazing. Very disciplined guy, a brilliant statistician, programs in several languages. Whenever I have lunch with Eric, to joke around our house, my wife says I come home and my head is exploding because I'm I'm trying to keep up with all the brilliant stuff that Eric talks about, and it's fun to try to stay up with him. So
Yeah, like I love that. And also reminds me of my subscribers all seen the trade of the negative oil trade.
yeah,
And the problem for me was I was in interactive brokers at the time, and when it hit zero, that was the end.
yep,
And I was so angry about it because it's, once again, it's not like me being a genius and knowing oil was going negative. I was holding a trend. It was
right,
trending down. I happened
exactly.
to be in the right month. Boom, and then it gets to zero, and they're just like, "Yep, you're done." And then it's like it went to like, I think it went to like negative 30 or 40 or something that day even, and it was
Wow.
just like, it was insane. But I love the idea of having these different strategies, right? Like there's this over here. Because really, no strategy, and this is the one thing people are always looking for when they start to trade. They're always looking for what is the one strategy that makes the most money, and there isn't one. Like if I'm a trend follower, even if I have long term, short term, whatever, I will run into periods of time where I will have major underperformance.
Yep,
If I'm a fundamental trader, I will run into periods of time where I have major underperformance. There is no one strategy. So, like you're saying, now you take all of these different strategies, you figure out these flat periods or these dips in your portfolio. What exactly would make that a little bit smoother in your portfolio? Then you take those, you add those into the strategy, and boom, you have it. Another thing that I love that you said that's important is identifying what works for you.
exactly.
Like you said, daily time frame works well for you. I'm more of a weekly time frame, works well for me. And everybody's going to have that different time frame. And also understanding that I know that me as a weekly time frame, there's going to be some weeks of a lot of pain in the middle of that. So I also
Right.
have to have opposite strategies from mine, which are very short term, very quick.
Sure,
We have like a 4 days down strategy and a couple other ones that are just very simple strategies, but they smooth out the returns, just like you're
exactly.
talking about. So I love that idea. And the all weather book was really good because it kind of lays that out, like figuring it out and going like, what would work well for me? Because I think of all the time, like people talk about strategies. For example, everybody wish they caught, Bitcoin from $1 to 20,000. That sounds really cool. Could you stick with that trend? Could you watch your money dwindle? I think it went from 100 back to one at one point. Like could you watch that happen to your money? Nobody really has the stomach for that. So, how do you build a strategy that can catch that move? Well, you probably can catch a strategy that can catch some of that move. You have to let go of that idea that you're going to catch that perfect bottom. You're going to get in it at the beginning. You're going to get out at the top. None of those are going to happen. But if you can put together these consistent returns, you're going to do better. Also, the other thing I'd like to talk about a little bit more is you talked about this, you know, 10% drawdowns, 30% gains, like looking for this perfect strategy that's just going to blow the top off the market every day. And really, like, there's very few traders in history who've ever done, especially for fund wise, who've done, 30% a year annually.
Right.
10% a year is usually a very good trader. 20% a year is, Warren Buffett. So I wanted to talk more about what do you see in newer traders or just traders in general a lot? What number do they think of in their head? I'm just really curious, like when they
Well,
talk to you about these things, what are they
if you
looking for?
if you look at Twitter and some of the comments I see, people that follow me, I think I got 51,000 followers, so I see a lot of different crazies out there. But there's people that are shooting for the 100% returns. They're trying to find the next Nvidia or whatever and try to buy it at 20 and sell it at 100. It's crazy. And there's lots of services that lend themselves to trying to find those stocks. They tend to be stock market oriented. They tend to be only upside oriented. They don't tend to be short sellers, and they're just shooting for the moon. It's crazy, and half of them wipe out and give up, and they go away, and some new crew comes in to take their place. It's insane.
I find
It's
that funny because you're absolutely right. I was thinking, I was talking about this the other day. We did a spaces and we were basically showing returns in something that you know a lot about, which is positive expectancy. And creating these systems that have like a good insane win rate, like 92% win rate. And then the same type of person puts out like a newsletter. I win 92% of my trades, check me out, blah blah. And you look at the positive expectancy on any of those systems and it's crap. Like you're not going to make money doing that at all.
You're lucky
Um,
if it's 1.02 or
yes,
something.
exactly. You
It's
just you
all it's reliability dependent, and if that reliability ever just starts going from 92 down to about 85,
mhm.
you're deep into the losses.
Yes, and that's I think another thing that's incredibly important is understanding when you're backtesting a system. I'm always going if my win rate's 50%, I'm more thinking about it like 40%, because and just one to have that in my head, but two, it's probably going to be that, just it usually happens that way. And these people with these 90% win rates, they're all, thinking that it's going to be like this and I just got to do this. And this guy is saying if I just follow exactly what he does, he wins 92% of the time. There is no such thing. And really, some of the best years I've had trading, the best times I've had trading have all been very low win rate years. The best returns I've ever had. The best return I ever had. I had a 35% year that year. Is a pretty low win rate for me. Most of my trades are normally normal years. I think I average about 45 to 50%. So I'm all the way down at this 35%, but I had the best year I ever had. And it's that positive expectancy that's so much more important.
I've never kept track of it, but my estimates are that over my lifetime, and I've had a fairly successful lifetime and long run in not only managing other people's monies, but managing my own. I'd be surprised if I was much above 33%
Mhm.
reliable. But like right now, I've been short the precious metals for a while, and they're my big winners today. I look at the screen over here. I'm just staying with it. The trend's falling. I'm not questioning it. I'm not trying to be cerebral over it. It just that's where my positive big numbers are. You get one of those that runs any distance, you make so much money on it. All the other stuff adds up to not even worthwhile worrying about. So
Yes. And that's perfect because that's something I talk about all the time, which is, one or two of these are going to be my big winner. The
exactly.
ones I'm talking about, even to have that win rate, most of the time they're just flat. They're flat, slightly up. Maybe the trailing stop hit just into profit, something like that. That's
And
not,
you never
it's not
know,
making
you
money.
never know which one is going to be which. You never know
Nope.
which one's going to be the big winner and
Nope.
which one's going to be the loser. So if you're like the casino, you're sitting up in the control booth and watching all these people down on the casino floor pulling their or pushing their buttons or whatever they're doing, or playing poker, or and you're getting a little piece of all these different games out there. You become ambivalent to where are you going to make money today? You just know you're going to make money because statistically you've placed your bets on so many different places that there's just going to be a statistical flow coming your way. You're going to
Hmm.
pay out a lot of people. You're going to take in a lot of money, and when you get all done with the day, you made some money again. And that's the way I look at. I mean, if I looked at the screen today, I'd say it's 2/3 green and 1/3 red.
Yeah.
So I'm having a good day.
Hmm.
That's what I try to do every day. I'm not trying to make all the red go away because that's part of the game. And I'm not trying to make
Hmm.
sure that everything I do is green. It's sort of a combination of a lot of different things flowing, ebbing and flowing. And when you add it all together, you're getting that consistency.
Yeah, I love that because it's something that I talk about a lot, and it's funny because I have so much pushback on this, but I hope everybody's listening to that. This isn't me talking, that's Tom Basso talking. The fact what you said where you don't know where your winners come from. I always say I don't know where my biggest winners will come from. I have people saying, "Oh, I would have known that." No, you don't. You don't know what's going to happen. Oh, well, this company had great fundamentals. Oh, yeah, I've seen tons of companies with great fundamentals and they haven't gone anywhere. So you, once again, don't know where your biggest winners will come from. And I think
Correct.
once you really identify that, it makes the game a lot easier. If you're sitting there, like, for example, the win rates aren't based on you thinking the stock market's going to go up. Let's say you get a buy signal. We're not getting chopped out and going, okay, well, we can't get back long again. So, if you're just looking at it from that standpoint, like your winners, like you would call it all winners. Like, for example, if you're trading the S&P 500 and yeah, like it's going to go down at some point, but your system's going to go up and then it comes back, you get chopped out a little bit, it goes back up again. That's one loss. But then you get another entry signal, it goes in. So once again, we're not just thinking about it linearly, like we're sitting there. This is the real game of trading compared to someone being an analyst. As
Right.
an analyst, you're able to just say like I could say today, yeah, the Nasdaq's going to probably hit all-time highs, and it could hit it this year, it could hit it next year, and I could come back and a year later and show my newsletter about I said the Nasdaq is going to make an all-time high.
Yeah.
As a trader, that's just totally different.
Yeah. Trader, I don't care whether it makes a new high or an all-time low. I'll go long or short with equal ease, and have a I don't have any bias whatsoever. I'm completely ambivalent to whether any one market goes up or down. I mean, as a citizen of the United States and a taxpayer and all the, and having to buy food and everything from myself and my wife, I have opinions on lots of things. And I think our economy's in very looking really dangerous to me right now. I think the debt is unbelievable. The
Yes.
deficits are bad. But hey, if the indicators say the stock market's going up right now, I'm long. I don't really, my opinion doesn't factor into my trading whatsoever.
Completely agree. That's so well said.
Yeah.
I talk about it all the time. What one way I think about it is, I look at the real world and I go through and I'm going, yeah, inflation is not fun right now. I'm watching family members, friends who make good money struggling. All these things are tough to watch, but I also have to think of the market as this very separate entity. Every time I've ever, when I started trading, I had all these opinions and like, something was going down or like something was going up and I'm going, well, the market is like this, the world is like this, the economy is
Mhm.
like this, the market can't continue up, saying things like that. The Fed is raising rates, the market can't continue up. Like you start to get in that mindset and really it's the market is going to do whatever it wants to do, not whatever you want it to do, whatever it wants to do. And I am completely powerless over the direction of the market. And once I really understood that, trading got a lot easier. When I was sitting there trying to control it,
Yeah,
that's not how this works.
exactly right.
it,
One of
it's
my
it's
favorite
really
sayings
bad.
that even my wife says it every now and again when she's watching the financial news in the morning. She's heard me say it so many times: is the market will do what the market will do.
Yes.
Everybody ought to have that on a framed little poster and stick it right next to their trading desk, and remind themselves that there's no need to predict. There's no need to lock yourself into one way of thinking,
Mhm.
because in the end, I've seen over the last 49 years of trading various markets, I've seen such insane days that I can't even fathom how they happened. I might be able to go looking back. I might say, well, these things came together and everybody got panicked and we went down 500 points on the Dow and it was 22% in the October 19th crash of 87, I think it was. I had to live through those as a money manager, even with assets under management, and deal with employees being panicked and clients being panicked, and keep a cool head yourself and realize now you're following your strategy, you're doing what you're supposed to do, everything's cool. And it's I think what happens is you start withdrawing from the action and the prediction that emotionally attaches you to a trade. If you think gold's going up and you're convinced of that and you buy gold, you've pre-positioned your mind to want to have an up move and to be nervous about if it goes down. So you see a date that like we have while we're doing this interview where gold's having a down day, you're you're stressing yourself out because your prediction is wrong. So you're kind of psychologically beating yourself up. If I made no prediction and I saw that it went over last week or so and I went short because that's what the indicators said it was doing, we went to up direction to a down direction. So I go short. I sold my longs, went short, and enjoying the ride today. But tomorrow we could have an up move and that would be a negative, and I might have a big move in currencies that I'm exploiting. I never know where it's coming from, but I don't have to lock myself into saying gold's going down or gold's going up. I'm just going to measure the way it's working and go with the flow. And once you do that, you can be Mr. Serenity because you're not stressing yourself out constantly. And I try to keep my position sizes to the point where I don't look at the screen and go, "Oh my God, that's a lot of money moving, up or down." I try to make it a reasonable rate of return that I think this year to date, Interactive Brokers says I'm up 28.9% on a time weighted basis. Uh, I wouldn't even known that that was the number unless I looked it up from IB. I don't even keep track of it myself. I knew it
Nice.
was an okay, good year. Uh, but I don't obsess over that. I just try to keep plugging away every day and do what I do. And the market, I think the market movement really dictates whether I have a good year or not. I go along for the ride. I don't get to call, hey, this is going to be a year that has major moves that I can exploit and make tons of money. Or it could be a sideways year that I don't make anything or even lose a little bit. My job is just to manage the risk, manage position sizes, keep looking at the prices, keep doing more trades. I think I've got like 50 something positions on now across 26 futures markets and about 5, 6 crypto and index markets, and
Mhm.
probably 14 positions in ETFs now. And I don't know what else, an option spread call that I'm short the call spread. You know, that's a typical day at the funny farm over here. Just do what I do. I mean, people ask on Twitter a lot of times, "Oh, given the Fed's doing this and blah blah blah," how do you change your strategy? What's your strategy going to be for the week coming up? And I jokingly respond, "It's going to be the same as my strategy was last week. Just going to keep running the same things every day and keep mindlessly doing it over and over again." That's what works for me.
I love that. I hope there was so much wisdom in that. I hope people really got that one. It's just, when your ability, I think this is the real thing that sets you apart from everybody else is your ability to keep focused on the plan. You know, I think I see that so much in traders where they're focused on this over here, like even for me, like I have fundamental ideas, and I talk about this all the time. I have plenty of ideas just like everybody else, but really the
Sure.
price action and my systems are going to tell me when to get in and out of things. And the more I just consistently plug away at that, the better off I am.
Yeah.
Not paying attention to this going down today or this going up today or what's going on in the news or whatever, just constantly going, I have a buy signal, I have a sell signal, I have a buy, just that. It's as simple as that. And really staying away from oh, my equity curve is doing this, oh, this is doing that. At the end of the year, yes, I analyze that, even at the end of the quarter sometimes. But really, it's the long run of just trying to get through year after year, trying to plug away, put in the right positions, do the right thing over and over again, and you make money as long as you have the other things set up. You have the risk management set up, you have your correlation set up, you have all these things set up well, you will make money. But the second you start doing my system, I like it sometimes. Oh, it's not really making money this month, so I'm going to jump in and, oh, this position, though, I did
Override.
see, yeah, I did see
Yeah.
that this position should go up. I have this opinion on it, so I'm going to double the size on that. When you start to do that, that's when you start to really lose money.
Yeah, and I don't feel like running my strategy today. I've got the stops in from yesterday. I'm just going to let it ride and not worry
Mm-hmm.
about it. And you don't do your work, and then you miss a trade, and that becomes your best trade of the year, which then you kick yourself for missing the best trade of the year. And it's so easy to psychologically unravel. And I found that being disciplined and running it every day, and my wife knows this. I mean, she builds it into the calendar when we're on vacations. Tom
Mm.
needs like an hour a day. So she'll say, okay, let's take a morning tour, and then you can come back and work your afternoon run. Builds it into the schedule for me.
Sounds like
And
my fiance.
she always makes sure we have internet at the hotel that we're staying at.
Yeah.
And so she's partially my support group to make sure I can do what I have to do and keep everything going smoothly. But if you can do that, what it sort of gets about as easy as breathing.
Hmm.
Strange to say, I'm moving millions, but it's it's kind of like take a breath in, take a breath out. It's you don't
Hmm.
think of that. It's just what I do every day now.
Yeah.
So I look at the clock and I go, okay, let's see. The stocks are closing at about 2 o'clock Mountain Time. So
Mm.
what am I doing at 2? Let's see. I'll be done with Jason's interview, and I'll probably be watching the clock, and I'll clean out some emails and some social media posts, and then make my run starting. And you just keep reproducing it over and over again, and it almost gets boring. I mean, but everybody thinks of me as this trader that's got all these fancy computers and all this stuff. I don't think of I think of myself as a retired guy who has a pretty good command of math and computer automation and the markets, who is very disciplined to keep doing that every day. I'm like a
Yes.
data processing person.
Do you remember a point when I guess what's important because I think the thing that I always talk about people have a position and it'll go against them and they'll be like, "What do I do?" And I'll be like, "I don't know, get out of it." Like obviously it's there's no reason to be in it anymore. But I guess the thing to say is when did you get that type of discipline? Do you have a point where it changed for you? I know you
Yeah,
mentioned before it's kind of always, your mind has kind of been like that, but was there a point that you can think of in trading where that
yeah.
discipline came in?
The first trade I did in corn, which was my first futures trade, was 2 contracts of corn. I lost $600. Never forget it. I had $2,000 account, so I lost, what is it? 30 something percent of my account. That shocked the heck out of me. And I tried to understand that, and I started figuring out all the math involved in futures trading. And then I realized that if I'm going to go after those big, large moves in agricultural commodities or currencies or debt instruments or whatever, I needed to minimize what I lose when I lose. And that gave me the push to try to figure out how to define in a logical fashion what I consider to be normal noise in the market versus it's above the noise or it's below the noise. So on any one day, if you look at a 5 minute bar chart and you expand it out, you're going to see sort of the top and bottom many days where the market doesn't really do that much and it just kind of is going sideways, and you can draw a line across the top and bottom. That's noise as far as I'm concerned in my world. To a day trader, that's money. If you can pick the bottom and top and do some swing trading or whatever you're doing, you can pick up some profits there day trading. But I'm a daily trader, so I look at that as noise. Now, as it goes through the top, like say of a Keltner band or a Bollinger band or a Donchian channel or any of the indicators that I would use, any of those kind of channel type indicators always give you a noise band here, and then they have an area above those lines and an area below the lower lines. And so I like to think of it in chemical engineering terms, which is what I am by degree, that this is normal, sort of what the temperature and the process that you want it to be. If it gets above here, you want to cool the process down. If it gets down here, you want to heat the process up. And so what I'm trying to do is measure these points and say, take action. So at here, it's on an uptrend. Here, it's on a downtrend. Take action, either go short or go long or whatever. Ignore the noise. Just if it's in the middle of those two lines, I don't care. Just it's another day, and just move the stops if you can. If you can't, leave them where they were, move on to the next instrument. It doesn't take that long to go through 50 instruments if you're doing it with that kind of mentality. You know what you want to do. You want to move the stops. You want to look for a reversal trade. If you don't have either, then you're done. Move on. That takes you 10 seconds.
Yes, absolutely. And it's something that I think people get when they think of trend following traders or futures traders in general, they see so many different things that we trade and they're like, how do you do it? And it's like, that's what you just said. That's the secret. Like, I can't say it any easier than that. That's the secret is it's all the same thing to me, like whether it's orange juice or it's bonds, it's the same thing. Yes, the
Yep.
position size might change, but that's about it. It's the
Yep.
same thing. The price action tells me just enough.
Yeah.
So for you, the learning curve was you found this thing called noise, basically, what we call noise for you and me in time frame. So the thing's
Right.
jumping around. You see that when it
You
breaks
might
out of
have
that.
weekly noise. I have daily noise.
Hmm.
It's the
Yeah,
same thing. It's
yeah.
noise.
And so when you're seeing that and you're going, okay, well, when it gets out of that zone, I'm seeing this is when these moves start. And that's when you
The
started
trend.
to really kind of have the discipline to just kind of be able to put the systems on. Were
Right.
you back testing this at the time and going like this
I
works,
was
this
doing
doesn't
that
work?
by hand. Yeah, by hand. This was before
Ouch.
personal computers. You're a lot younger than I am. You
Yeah.
probably don't remember the days before personal computers, but I was working with an SR10 add, subtract, multiply, divide calculator and some grid paper and some graph paper.
Oh,
And
wow.
I didn't help my eyes any. That's why I have glasses all over my desk. But uh, yeah, the whole when I did studies, it was painfully time consuming and very boring. And I couldn't cover a lot of ground, but I could cover key periods where I
Mhm.
test out a strategy during a period I know it should be tested through. Like if I knew that I suspected that this type of strategy would lose money, I might concentrate a study right around that period so that I could see what the effect was on the indicators. It gave me a really more intimate knowledge of the math than I think a lot of new traders running all sorts of simulation platforms just hit the button and out comes some statistics and return to risk ratios. And they don't dig into where was that maximum drawdown, what caused it, which market, was it a number of markets or was it just one particular, it might have been a bad piece of data. It might have caused the signal because somebody screwed up and reversed a 6 and a 9, which I've seen happen in the real world. And it comes through the data, and then all of a sudden you're triggering buys and sells, and they're completely stupid. And looking at it that it's stupid, but at the time nobody thinks anything of it. And all of a sudden, you've changed your simulation when you start correcting the data. And so there's just a lot that goes on in simulating things. And I think a lot of the new traders don't tend to dig into the simulation in a very tedious fashion and go through day by day and try to live with that strategy and try to understand what would I be thinking right now after I've lost, 7 trades in a row with this strategy. Would
Mhm.
I feel uncomfortable and want to abandon it or not? If you look at the total, it's real easy for the human being to say, oh, that's 15% and a 7% drawdown. And you're kind of in your mind, you're just drawing a dotted line up the page and, figuring out when you're going to retire. That's not the way trading is. You're going to 15% might be 30 one year and minus 10 the next. So you got to dig into the details. And if you do that, then all of a sudden you get a much more comfort level with what it is you're doing. And when those times test you, when the strategy is not working well, you can just, laugh it off and say, yeah, this is one of those times that this type of strategy, given these types of market conditions, really shouldn't make money. It's doing exactly what it's supposed to be doing because this is not my kind of market. But hopefully, you got some other strategy that it isn't, slaying it. So it buffers your total portfolio.
No, I love that. It's that type of thing right there is so important where you have to really understand the difference in strategies, understanding the how many what's your win rate, like your win rate, okay, that's one thing. You go like, okay, I have this 40% win rate. Great. What about that period of time when you go back and really start digging through the data and see you lost 7 times in a row? like you said, how do you feel about that? For me, I know like I love to go, and I started out doing those with spreadsheets. Back then, this charting software was completely different, and so you start off with spreadsheets, and you're just putting it all in there. And then, you really have to see like, okay, I lost this many times in a row. Wow, that sucks. Because something could spit out a 60% win rate, and you could still lose 6 times in a row.
Oh
People
yeah,
think that's impossible, but that's absolutely the truth. So
yeah.
if you're looking at a 60% win rate and you're thinking I should be winning, I should only lose 4 times at most, like that's not it either. Um, so really like what you said is so important, really digging into the data. That's something that everybody should take out of that. Dig into the data, really find out what you and feel what you would be feeling during those times. Because for me, I know that when I first started being systematic, I remember having a conversation with another systematic trader talking about the system that I was literally ready to just throw out the window and be done with. And then he goes, did you really go back and go year by year and figure out like what would exactly happen and blah, blah, blah. And I said, no, and then I found out I still use that system to this day. It is still profitable. It still works really well. But during that period of time, my mind wasn't ready to take those losses. And so what you're talking about is you were prepared and understanding that you could have that losing period completely. Whereas I missed that part, and it took me till later to actually go back and look at the data more. So that's very, very cool.
Yeah, that helped me a lot to just take the self-responsibility and the discipline and the awareness to know that I need to be aware if I'm trying to deviate from my strategy and pull myself back online and get myself straight again. And that loop of being aware that you're a little off center that day, you're not neutral, that you're becoming too bullish or too bearish or anything, and just kind of being aware of your mental state and trying to make yourself ambivalent to which direction the market's going and trying to stay sort of agnostic on direction and everything, that all of a sudden makes the world a lot easier place to deal with in trading, because you can just as easily go either way. I remember one of the things that Paul Tudor Jones, obviously great trader that he was, and in the first Market Wizard book, I think, he said that he has a feel for, let's say he wants to go long cotton or whatever. He gets into the cotton trade, and it's sort of too easy for him to buy. He's sensing that he's putting size in there, and where he'd normally be restricted on how much he could get, he's getting plenty. So all of a sudden he backs off. If the thing starts going against him, he's bailing like crazy, and he sees it starting to accelerate, and he's going short now. So this is all within minutes. He has gone from preparing himself to be long cotton to now being short cotton, and he's changing his mind on that all in minutes. And that to me is the mark of a good trader. You have to be neutral and not worry about whether you're right or wrong. You have to cut those losses short. If it feels like it's going against you and it's going to continue, and maybe it's a short sale instead. And so open your mind up to the outside the box thinking of not locking into long, short, sideways. Everything goes, and it
Love
just
that.
makes life a lot easier on it as a trader.
Love that. Thanks so much for your time, Tom. I want to end on
Pleasure.
that note because that was just perfect. I love the analogy. I love the grabbing what is a good trader, and like that's really the thing I always see in you is that you have that ability. Like not everybody has that ability. It's very hard to, even when you look at somebody and you're watching them go like, oh, I was long gold today, I'm short it yesterday. Like when you look at people like that, a new trader thinks like, wow, that's not how you trade, but really that's real trading there. That's
That's
serious.
how I
So
trade.
yes, that's how I trade, and it has to be because if you're sitting there and you have these biases, you're never going to catch those moves. You're never going to be on the right side of a trade if you're sitting there biased and going like, I have to be long, it's got to do this, or the market doesn't have to do anything.
Yeah,
The market can do whatever it wants to do.
market can do what the market will do.
Hmm.
And even as an automated trader that I am, a lot of people say, well, you don't need to worry about your psychology. Well, yeah, I do, because I'm the ultimate guy that has to hit the button to start the program to run all this stuff. I'm the guy that can
Yes.
override any of those trades that come through. And I can look at them and say, oh, God, going long coffee here, that'd be stupid. I could
Yep.
just override it and delete the order.
Hmm.
It's so easy to do stuff like that and meddle
Yep.
with what your plan is. And you have to be aware that you're meddling and say to yourself, Tom, just settle down, go back to neutral, do your thing. And, so you end up for many years talking to yourself. It's kind of at this point, I don't need to do that too awfully much. I'm pretty disciplined to what I do, but you really, that's some of the key to trading success is all in your mind. It's how you can discipline yourself, get a strategy going, watch your position sizing. It's very critical. If you overdo it, you increase the risk of ruin. If you underdo it, you have the risk of inflation outpacing you. You have to make some money to keep up with inflation these days. And so you have to take some risk and attack risk, but taking the right position size and doing it consistently helps you be able to have that consistency with what you're doing. Everything's about consistency and keeping your mental state consistent. And human beings aren't wired that way necessarily naturally. So you have to work on it a little bit.
Yes, absolutely. Hey, thanks so much, Tom, for coming on here.
My
As
pleasure,
always,
Jason.
it's an incredibly enlightening conversation. All right, guys.
I
Thanks so much for
enjoyed it.
joining us. Thanks for coming on.